Hello and welcome. I'm Jonathan Beale and this is the ASB Investment Podcast, a show that keeps you up to date on the market and helps you make smart choices with your investments. ASB Senior Wealth Economist Chris Tennent-Brown is back today to give us a market update. And what an update it is. Among other things, we're covering the US-China trade deal, upcoming elections, and of course, how the markets have reacted to the recent coronavirus outbreak. Does this change anything for investors? These are entirely our own views. It's not investment advice, but we know plenty of experts at ASB that'll be happy to chat if you need. Chris, welcome back to the booth. Haven't seen you. It seems like a long time. It must be like 2 months. Isn't it?
2 months since we're in the booth, and stacks of stuff's changed. We've got through another Christmas and New Year's, and here we are back again, looking at the year that's been and the year ahead.
Yeah, and something's changed in the booth. It's normally quite comfortable in here, but now we're sort of perched on these incredibly very attractive looking stalls, but very uncomfortable stalls to sit on, actually, which is sort of giving me a bit of a workout on my core.
Yeah, so if we sound like we're rushing through it, it's because we're getting sore.
And what's been going on in the Chris Tennent-Brown household over the last couple of months?
Oh, well, been working on the plane and selling old bikes that I've restored or not restored to make room for the things like the wings that I need to build. And so it's just a big, long process, but quite good fun.
Yeah.
I managed to get myself get rid of 2 motorbikes and buy one new Vespa.
Oh, what sort of Vespa have you bought?
Oh, I bought this 300cc one. It's just a little beast.
Wow.
But I got sucked in by the latest technology, this digital dashboard, and I am so hopeless with technology. I basically need to find a teenager to help me understand how to Bluetooth it to my phone.
I mean, my goodness.
Why would I want
sounds painful.
Yeah, why would I want to Bluetooth my motorbike to my telephone?
Yeah.
But I'm sure there's a reason. But yes, I'm struggling with the new technology. But the actual Vespa is good.
Yeah, I've got a 125 Vespa.
Oh yeah.
Yeah, I use it around Devonport. I used to take it over the bridge, but it was just so scary going over the Harbour Bridge that I gave up, and I just now go around Devonport on it. But
yeah, I try and keep off the Harbour Bridge too.
Right. Now, we could talk all day about scooters, but we should probably talk a little bit about what's going on. And I was reflecting before we came into the booth, like as you sort of get into 2020 and 2019, we'll talk a little bit about what happened there. But if I sort of go back to the end of 2018, probably people were quite nervous about what was going on in financial markets. 2019 was going to be this year where there's going to be lots of volatility and trouble with markets and stuff. Actually, that didn't play out at all, did it?
Oh, it's a really big lesson in how it all works and sticking with your strategy. Christmas of 2018, I just couldn't wait to get home because the bad news was coming thick and fast. Remember, share markets were down 10-20% at the end of 2018. And when we were recording our, hey, what's the year that's been and the year ahead, we were sort of trying to keep people calm because we'd just gone through this turbulent time. And really, nothing much changed over the course of 2019. We got heaps of bad news, but what a phenomenal year for investments. So it's really interesting to think a year ago, or a little bit more than a year ago, people were incredibly nervous. And then 2019, well, for KiwiSaver, for example, that was the best calendar year performance for all the diversified funds. It's just phenomenal. We always come back to this sticking to the long-run planes and try to ignore some of the news. And last year was definitely a good example of that.
But I think when we've been talking over the year, there was so much like, Brexit, Trump, Brexit, trade war, Trump, Brexit. Like there was so much going on, but it seems to have sort of some of it's gone away, maybe, or quietened down.
We had all the global uncertainty coming from Trump and Brexit, and then the other thing which changed a lot was at the end of 2018, we were really worried about how much higher could interest rates go, particularly in the States, because the Fed was hiking rates. And then, of course, the big change that happened in the first half of last year is the Fed went from talking about tightening to actually delivering a couple of rate cuts. And same with the RBNZ here. We had the rate cuts last year as well. And so that was the bit of the oil on the wheels for share markets for sure, was those declining interest rates off the back of that. But the Trump trade war stuff looked like it could be a disaster right up until December, when finally they announced, hey, well, we've got phase 1 of the deal. The UK elections finally went the way that the polls suggested. And then so in contrast to a year ago, we probably all went home at Christmas time from a global perspective thinking, hey, things sound like they're getting a little bit better now. And that's certainly how the year started this year. Markets were looking pretty strong, and this is the way it always works. Just when you think, oh, this is going to be a bit easy, a new thing comes along, and now we're, coronavirus or COVID-19. We're learning all these new names. We're learning about parts of China that certainly I hadn't thought about in too much detail before, and with this virus. So this is just what markets always do. There's always something new to digest and process.
Yeah, and we'll come on to coronavirus and how that might impact markets. But I suppose the real learning for the lot of 2019, and you talk about it a lot, is you've got to sort of get through all the noise, get through all the sort of headlines. Actually, what are the fundamentals? And there's been global growth, and that's been positive. And with low interest rates, people are looking for different assets, and that's driven markets around the world. So there is some core messages there, right?
Oh, totally. And also, bad news definitely sells newspapers. But when you look through the mix, there's some really good stories as well. And look at New Zealand's export prices, for example. They're really high right now. Forestry is an exception. But dairy prices, meat prices, horticulture prices, that's a really good story in New Zealand that you have to look through the details because it's much more fun to report about the things to worry about. So, and like you say, the fundamentals for investment were actually pretty solid. I actually thought that this year, 2020, might be a bit like 2017, where we had so much bad news baked in. Remember then we were going, what on earth is Trump going to do now that he's becoming president? And then it actually got better and better through the course of the year, which is a really good backdrop often for investing.
Yep. And then coronavirus, so this has come a bit of a shock to everybody. And how's that, with a sort of an economic hat on, how has that affected sort of forecasts going forward? And what's your view on that?
Yeah, well, it's hard to ignore something like this, and it's immediately having an impact. The way that we tend to think about any sort of event, if you like, is what will this do to confidence? What will this do to financial channels, and what will it do to trade channels? Because those are the ways that these things impact the economy and businesses. So in this instance, it clearly impacts confidence right off the bat. People are thinking, I don't want to travel with these concerns. And then it's clearly, even if you did want to go to China now, it's very difficult because the airlines have stopped flying there. Financial channels, it's not like the global financial crisis where it really shuts down any markets, but it has impacted things like the New Zealand dollar, oil prices and that sort of stuff. And in some areas where we can see it's impacting trade and services, if you're a tourism operator right now, it's going to be tough. It's going to be really tough, and how long it's tough for will be, we'll only know in hindsight. It could be 6 weeks, it could be 6 months if it's something like SARS, and so this is having a real impact. So in our case, normally we'd forecast the economy at the moment's expanding by about 0.5% per quarter or 2% per year. Think of this so we think in the first quarter the economy will actually have a tiny contraction, largely because of those service parts of the economy getting really impacted by the tourists just not coming here. In the longer run, when we look at previous examples, things like this, some of the stuff just will never happen again, but a lot of it just gets substituted. I think of in a personal case, my partner and I were going to go travelling up to Asia, and we think, well, no, we won't do that while this is going on. We'll go to Whangarei instead, which
nice.
is...
Good swap around.
Yeah, so she's stoked.
Yeah.
And being Scottish, I'm pretty pleased with how the bank account will look with Whangarei compared to Asia. It's
funny you say Whangarei, because I know you're going there this week, and that's why you've said it, but I was driving up there last week, and one thing you notice is there are no logging trucks.
Yeah.
So normally when you drive up there, like it's quite a dangerous road, you got logging truck, and you probably see like 10 to 15 logging trucks on your journey there and back. Didn't see any. Not even cutting the trees down at the moment.
So it's really interesting how quick some of this stuff hits. Yeah. And, that's an example of something where a lot of activities stopped. Factories have been closed, so they don't need the logs, or they can't process the logs up there, so they will stop them coming. Ships can't get unloaded and that sort of thing. But then what you'd expect to happen is it's not like that building that they were going to be used on isn't going to get built. It's just going to get built later on. So you tend to get a lot of catch up with that sort of stuff. On the other hand, if someone was going to travel here in the Chinese New Year this year, then, well, maybe they'll come next year, but it's not an immediate fill-in like that. And, those are the businesses that are really feeling it. We've seen the headlines about how forestry's been impacted. They're not chopping down the trees. They're not shipping them around. And tourism operators, if you had a coach business that you're driving around Chinese tourists, well, it's going to be really quiet until this gets sorted out.
But are you seeing any impacts in China or the US? Is it going to have any sort of effect on their sort of economies?
Well, one of the things which is really pleasing and is the market response. Initially, shares dropped with this, and share markets had hit record highs towards the end of last year. And then in January, they started to pull back when people started to worry about this. But now we're in the thick of earnings season in the States, and the company reports are largely coming out fairly positively, and share markets are responding more to that. And economists and share analysts aren't doctors. Will tend to look at how did this impact markets in the past? What happened with SARS? What happened with swine flu? What are the indicators that we can see when this is starting to get contained? So the investors are interested in that, but it's not like the markets are plunging on the back of doom and gloom and despair. They're actually trading more in line with what companies are announcing in terms of their results.
And you talk about SARS. How did markets react, and what sort of recovery did we see? Just to give people sort of a view of what might happen.
Well, that's a really good question. And what happened then was some periods of time it was the big news, just like we saw in January. And other periods of time there were other events going on that dominated. And actually that turned out to be a pretty good couple of years for shares. We were recovering back then in the early 2000s. I read the reports that I wrote. This is one of the things that you can do when you're as old as I am, is go back and read what you wrote in 2003. And back then, SARS would get a line or two in a report, but we were more worried about conflict in the Middle East and terrorism. The big terror attacks were only a couple of years behind us. And so those things were driving sentiment more than SARS itself. And I think that feels like what's happening now is earlier on it was big news, and now you've clearly got to keep abreast of it, and it's definitely impacting some businesses quite majorly. But over the course of the year, we'll get more focus on some of the other things. And one of the signs people look for is when do we start to see some peaks in the number of cases we're getting each day? And then when that starts to fall away, you get a sense, okay, well, they've got the right procedures in place to contain this, and we're understanding how the disease gets spread. And then ultimately, like we saw with SARS, is when you've got medical procedures to help people so that they don't die. So all of those things will be stuff that's important to watch over the next few months. But as we saw with SARS and swine flu, it's just one of the worries that we've always got going on. It's not a complete game changer for any investment strategy.
And again, talking about the results, company results, a positive feel to the results that are coming out, and people are actually, companies are optimistic about the future as well.
Yeah, the results in the States have been pretty good. We're just starting reporting season in Australia, and I think the thing that people will be looking at there, our friends at the Australasian Share Fund managers will be really looking at how the bushfires are impacting companies. I mean, clearly for insurers and reinsurers, this is going to be a really big deal. And for businesses with exposure in the impacted areas, how they're coping and what's their strategy. So that will be a focus for the reporting season down here.
And then obviously recently the Reserve Bank held interest rates, and I think with your forward thinking you were thinking of maybe a rate cut coming in the future, and how them holding and their sort of rhetoric and their talk changed your view at all? Yeah,
well, remember last year we were really surprised when they did that big 50 basis point cut, so twice the usual size. And their logic was really, let's deliver a bigger cut now and get the cash rate to where we want it to be. And since it got down to 1%, the Reserve Bank seems like they've been pretty confident that's it. We've had softer economic growth forecasts than the Reserve Bank and slightly lower inflation forecasts, so we thought they'll probably end up cutting again. But it looks like that's worked, and those lower interest rates are flowing through to the economy. We're seeing more buoyance in the housing market, for example. And so we think that probably will be it now, which is indeed what the Reserve Bank signalled when they met in February, that the next move in the very distant future is expected to be a hike, so nothing that would expect to happen this year. And of course, if things turn out worse, if the coronavirus has a much longer impact on the economy, or the economy softens much more because of it, well, as always, they're in a position to respond. But the base view now is that's it. So for things like mortgage rates, maybe we're at the lows now, or some of those really low rates we saw in late 2019 could be it. We're not expecting rates to start lifting strongly anytime soon, but it's an interesting shift in stance.
And when you say anytime soon, like you don't expect any increase in 2020?
Maybe by the back end of 2021, 2022. Of course, when markets start getting excited is when they think, yep, I can think this is definitely going to happen. And you can see quite big moves in interest rates within financial markets in anticipation of the Reserve Bank adjusting the cash rate up. But I think that'll be next year's story or 2022. This year, I think we'll just have a whole bunch of meetings where they stay on hold and
pretty boring meetings. Well, on hold again. And on hold again.
Yep. They're watch and wait as the
watch and wait
and be boring as part of the instruction manual for being a central banker, I guess.
And that must be again another positive for share markets. Then, so you've been talking consistency for the last year about one of the drivers for share markets, people looking for the yield they need, and they're not getting that through sort of traditional interest rate vehicles, and that. So if they're not going to be increasing, that probably forward thinking going, actually share markets might continue as they have been.
Yeah, I think the interesting thing we'll be watching over the next year or two is just where interest rates settle for things like the long-term bonds. But for a lot of clients, the boring old cash term deposit rates, I think they're going to stay low all through this year. And that is a driver. Some of the utility stocks, the electricity generators, performed so well over the last couple of years, and because they pay out decent dividends, and their dividend yield's really attractive compared to a 2.5% term deposit. So I think that'll still be a theme. And in that vein, one of the local bits of news to keep an eye on over the next little while will be any announcements around Tiwai Point down in Southland. That's a big electricity user and a key part of the electricity pricing in New Zealand is whether that's absorbing about 13% of New Zealand's electricity. So what happens with that plant will be important for those electricity stocks here. So there'll be some stories like that going on through the course of the year, but that interest rate story that's driven markets so much in New Zealand and offshore for that matter, I think will stay in place.
And you mentioned the housing market, especially in New Zealand, seems to be getting very buoyant and lots of activity going on, sort of, and not just in Auckland, regionally as well in New Zealand.
Yeah, so Auckland was flat for a few years, and this last wave of interest rates coming through to lower mortgages, I think, is flowing through now. Not a lot of volume going through the markets, but houses selling reasonably quickly, people getting good prices. So we're forecasting that Auckland house prices could go up over the course of 2020, and the provinces had been going all right through the course of last year, but this is definitely helping there. You can get a mortgage comfortably under 4%. It's the lowest they've been since the 60s, and low interest rates work. They do support the housing market, and that's what's happening. I think that'll be a theme over the course of this year.
And one of the other themes this year is going to be election year. All around the world, and we're gearing up for it here. But let's go over to the States first. So this just seems to go on forever, doesn't it? Really.
Oh, yeah.
But you got your Trump T-shirt on 4 more years. What do you think he's going to get in the elections, or where you
yeah, I think he will, and we need to always put in the little line there is that I'm not really a Trump supporter, because people write in and complain. But as much as I'd prefer possibly a different candidate or two, I think it's pretty hard to lose the election if the share market's going well. The unemployment rates is incredibly low and the economy's creating jobs. That will work for your supporter base, and that's the environment that I think they'll probably be in. The other bit, which clearly happened at the end of last year, is Trump now needs to deliver on all these deals that he says he's done. So there'll be lots of noise about, look at the progress I'm making on the wall. I'm pretty sure the Mexicans aren't paying for it, but look at the progress on the wall. Look at these trade deals I'm landing, and America needs a tough guy like me because we were getting a bad deal, and now I'm getting us a good deal.
Whatever you think of him, and most of it's not very nice, quite rightly, is he's good for share markets. And you can't, he's, whatever he does, he keeps going, and even the volume of trade we're seeing here in New Zealand is up year on year because of some of the things that he says.
I mean, global economic growth is good for share markets, companies performing well, and clearly the tax cuts that came through were really good for the after-tax earnings of companies. So there's been some policies that have worked and supported the share market, and he's gone from calling it that a bubble when Obama was president to essentially a barometer of how well he's running the economy now, and it does make a big impact. My dad lives in the States and has done for many years, and for them, their share market going well and their retirement funds, be it a 401k plan or direct investments in the share market, that has that same sort of wealth effect for them that housing does for us. We tend to think, hey, if the housing market's really buoyant, retail sales will be buoyant, consumers will be confident. Well, that's just a wealth effect, and rightly or wrongly, that's a key driver. And in the States, it's more linked to the share market than the housing market. So roll into an election, and if you're ticking those boxes of the share market going well, and plenty of jobs around, it's hard not to get a second term in my view,
or maybe even a third.
Oh, well, he'd have to change some rules for that. But maybe he's got ideas that he'll change the rules like we saw in China and Russia so he can have a third go. Or maybe he's got a kid in mind.
Yeah.
Imagine
that'd be good.
Oh, yeah. So, and hey, at the same sort of time, we'll have our election here, which will be...
way more exciting.
Yeah, that's right. So hopefully not quite as much many bad hairdos as the US one. But
we'll probably get promised lots in the next sort of few months, won't we? Is that normally what happens?
Yeah, well, I think that it's quite interesting at the moment because Labor obviously came out with their infrastructure plans over recent months. So that you would have thought was a key point of difference that National could have had a go at. But now they've got this long-term infrastructure plan and increased expenditure there. But there'll be plenty more stuff over the course of the year. At some point, we'll probably just do nothing like we usually do and watch the election for unfold for the last 6 weeks or so. But that's a story for the second half of the year. So plenty for me to write about in my monthly reports.
Fantastic.
That's for sure.
All right. Hey, well, lovely talking to you again, and we'll call it to a break there. My core's really hurting me, so we should. But thanks again. Really, some insightful. I thought the comment around your father and the way Americans think about it was really insightful about how the different feelings we've got around property and they've got around share markets. Quite really fascinating.
I remember talking to my dad, and he wanted to get a new car, I think, and he basically said, "I've had a great couple of months with my investments, so big deal. I'll buy the better model." And
fascinating. Eh?
Yeah, it is. It's fascinating. And hey, meanwhile, you've got a kettlebell, so you can maybe do some core stability in case we get these stalls next time.
Well, I did get a kettlebell for Christmas, and supposedly I've bought it's too light. Supposedly the starter weight is 16 kgs for men and 10 kgs for females. I bought a 10 kg, but I'm just trying to get the motion before I go heavy.
That's good thinking, and just tuck it away, and in 10 years' time you'll be back down to the 10 kilogram
exactly,
one anyway.
Exactly. All right, hey, lovely talking again, Chris, and take care and enjoy your trip up to Whangarei.
Thanks, Jonathan.
Thanks for joining us today on the ASB Investment Podcast. If you have any thoughts on today's episode, or if there's anything you'd like us to discuss on future shows, please fire your suggestions through to podcasts@asb.co.nz.